are the sons and daughters of the soul. We are resilient and forever forward-thinking. We ask for nothing else than the opportunity to live and to create the lives that we were meant to live. We want nothing but an equal chance at options and possibilities. The same possibilities and options to live out our potential as our fellow man. We want to be heard, understood, and expressive in our reality. We are the future. We are the creative. We are here.
World Financial Group offers entrepreneurs from all backgrounds the opportunity to start their own business on a level playing field. Dr. Yana Woodhouse, receiving the WCM Wall Street Pioneer Award by the United Black Wall Street of America, Inc., is one of those entrepreneurs.
I see WFG and TFA as a place where African Americans with an entrepreneurial mindset can flourish. And the bonus, we help families and serve the communities across the country.
To learn more about us, go to worldfinancialgroup.com.
Hello, and welcome once again to another fantastic, great show that we are getting ready to put on you. Another hour of letting you know how to take full advantage of your credit, how to do everything that's need to be done by your credit profile. These shows are educational. These shows are informative. These shows are designed specifically with you in mind because we want you to get better at this situation that has been plaguing us for some time now. How to do what we need to do when it comes to our credit profiles. Good afternoon, everyone. Welcome to Tuesday and welcome to another hour of Leverage Your Score with your host, the Dress Down CEO, sporting his Bears today and got on my Beamer shirt. But my name is Tyrone Glover, and I am your Dress Down CEO coming to you live from my hometown, Yonkers, New York. And we do what we do every single week for you, which is making sure that you are financially responsible, financially aware, financially secured, financially prepared for whatever circumstances that might come your way. And the best way to do that, I tell it to people all the time, is you have to have a solid foundation. A solid foundation. That foundation is going to start with one thing and one thing only, and that's going to start with your credit. How you manage that credit is going to offset everything else, whether you have a high-paying job, whether you have a low-paying job, whether you're someone categorized as poor, middle class, wealthy, uber wealthy. Your credit is going to have a huge role in how you are able to obtain certain understandings, whether it be a house, whether it be a car, mobile home, boat, yacht, box on a corner, whatever it is that you want. It's completely up to you, and your credit profile will allow for that to happen. I know we're all talking about inflation. I know we're all talking about interest rates, but I don't want you folks to worry about that. I really don't. That's something that's far out of our control, and it's monetary policies. We can't do nothing with that. There's nothing we can do. We're not congressional leaders. We're not House or Senate Republicans or Democrats. We have this much. And if the January 6th committee has proven anything to us, that they're telling us more or less that our elected officials aren't listening to us. They're not listening to us. They could care less. They could care less what we have to say. And our job is now to make them think about why they're caring less and then get them to either do the job or guess what? Vote them out. I want you to repeat after me. Vote them out. That's it. That is it. We got a midterm coming up here in November. I hope those of you in New York got out there and did your due diligence. And we got a general coming up in 2024. So if we want democracy to stay in the manner in which it is, then we're going to have to do our part. If we want to have the securities of being able to check our credit profiles, to do whatever it is that we want to do, we're going to have to make sure that we have congressional leaders that are there to do the job for us. They take an oath as a soldier. I took an oath too. Took an oath, and I understand that oath. And I understand it so much that I would literally go to bat for anybody who took the oath and for those individuals that are standing up to that oath. But that's a whole different topic for a whole different day. Today, we're going to be talking about when did credit scores start? A brief look at the long history behind credit reporting. And this is pretty exciting because there's a lot of things that I didn't know. We're going to probably go over some stuff that you already do know. But before we do that, let's give a shout out to the creator, because without him, none of this would be possible. I am so grateful to be able to do what I do every single Tuesday. And without him, as I stated, none of this would be possible. So I'm grateful that he woke me up this morning. I'm grateful that he kept and got me on my way. I'm so grateful that he allowed for me to spend time with some of my loved ones that I always do. Love to spend time with them. I have my little nephew, and we had a great weekend. We spent some time with another fabulous niece who celebrated some wonderful achievements there in Connecticut. So not my Asia, because that's the mom. Malaysia. Malaysia. Congratulations on all your accomplishments, my dear. Please keep up that great work. And to all of my other nephews and nieces, family and friend, love you. Now that I said that, let's get them in. Let's get them all. So go to that device. As you already know, I'm going to ask everybody to do it. Go ahead and send this conversation out to one person. One person only. That's all. And then get that person to send it out to another one person. Because if you do that, that's called sharing the love. And we love to share the love around here because this is important. This is super important. We got to get people on point with understanding how that credit works. How can you leverage your abilities even further by having a great understanding of how your credit works, how you manage it properly, what things that you have to do to keep that. Again, credit should always be going in an upwards trajectory. This up and down, these ebbs and flows, that's not what credit's supposed to do. All right. So if you have already sent that out to one person, hopefully that person will respond back to you and they themselves will send it out to somebody else. All right. But I'm doing my one. Come on, get in there. There we are. Doing my one to my one person. And I'm going to ask that one person to please send it out to one more person. Please share with one more person. Thanks. All right. So I hope everybody is having a great start to their week. I know we got 4th of July coming up here. I'm sure there's probably some holidays that holiday is one of our most impressive holidays. So I'm sure that everybody is doing their part to get that out into the public sphere. But as we know, everybody, let's get out there. Let's do what we have to do to keep this party going. All right, so we're going to jump right on into it. When did credit scores start? A brief look at the long history behind credit reporting. So, ever wonder how credit scores and credit reporting came to be? All right, so the topic outline that we're going to be discussing, the rise of credit reporting, credit scoring takes hold, credit scores today, what is a FICO score and why it's important, and what is considered an average credit score and how to improve it. So we're going to be talking about quite a bit of stuff, and it's so funny because these go by so fast. I mean, so fast. But don't let that bother you. Don't let that concern you. We're going to cover as much of this information as possible. You just sit back. Hope you got something to write on, something to write with, because as I say all the time, these shows are super informative. These shows are super when it comes to making sure you have all the information. So if you are someone like myself, always keep something to write on, something to write with. I like to take notes in my phone as well. So again, these are informative educational shows that are only designed for one thing and one thing only, to get you informed, to get you on board with the things that you're going to have to do if you want to, again, maintain a credit profile that regardless of what your income is, you'll still be able to get whatever you want to get. And I'm talking about 2%, 1%, 3%, no more than 4 or 5%. If you're over that mid-level, understand that mid-range, that mid-low range, if If you're over that, you're paying too much for your goods and services. And if you're in that double-digit tier area or range area, you're definitely getting taken advantage of. All right, those are default areas. 18, 19, 20, those are default. Those lenders are just waiting for you to default. There's so many protections for businesses that it's almost unbelievable that we get bought into negative reporting. All right, anything charged off, anything that's in a collections, anything that's on your credit report that is a negative can come off. You just got to know how to do it. And everything's about a negotiation. So these shows, as I stated, are designed to give you so much information. I mean, information overload. All right, but that's why we have the comment section here. That's why we want your questions. That's why we want you to get more involved, engaged. Because once you do that, I'm telling you, you're going to be successful. Oh, I'm getting somebody chiming me back saying, hey, when's the show? Well, the show is on right now. Join us. Hey, that was beautiful. Thank you, Gloria, for that. All right. So as you saw, the topic outlines are the rise of credit reporting. Credit scoring takes hold. Credit scores today. Why FICO, FICO, Fair Isaac Corporation scores and why they're so important, and what is considered an average credit score and how to improve it. All right, so whenever you're signing up for the very first credit card and applying for a mortgage, your credit score plays an important role in determining whether or not you'll be able to reach many of your financial goals. Your credit report and that 3-digit score, again, 3-digit score number can also make a big difference in how much interest you'll have to pay on loans, as well as the type of loans or credit cards you qualify for. So that's what we call the credit mix when they talk about different types of credit products. So you need to have a good mix, and that mix is roughly around 10 points of your overall credit score. That 3-digit number that they're talking about, some of you have already seen it. Some of you already have already probably used it, or again, taken advantage of it, or realized that, wait, mine is too low, or mine is just right, or mine is too high. Well, too high is never a bad thing. So again, too high can never be a bad thing. 850, there is a 900 range too, but we don't reside in that area. But again, you get my point. Too low, not good. Middle tier, need more work. Right where I need to be, just double check with somebody like myself to make sure that you're not paying more for your services. Credit reports and credit scores, as we know them today, are part of a long history of merchants and lenders collecting information and using it to evaluate whether a potential borrower would be able to pay their loans back in full and on time. So those two things right there, in full, not necessarily have to pay it in full. You can negotiate to drop down some of that interest, which again, still pays it in full. It just makes your terms and conditions more favorable for you. And obviously on time, on time, on time, on time, on time. That's 35% of your overall credit score is how you pay your bills on time. And according to Josh Launer, an associate professor of communications at the University of Hampton and a co-author of Credit Worthy, a history of consumer surveillance and financial identity in America. To understand more about how credit scoring and credit reporting came to be and how both eventually became such an important part of our lives. So an author who has really dove in a little deeper than I have, but we're all on the same page. We're all talking about the same thing. There is a misnomer out there in the community about credit. And my job is here to set the record straight. It's not to continuously confuse us or dilute us with situations and circumstances that do not add up. I got this new hashtag that I love, and I'm sure everybody else is using it as well. Make it make sense. So if you're not using that hashtag, please get out there and start using that hashtag. It's going to blow us all up, but make it make sense. There's a lot of things that are not being made sensible so that the common man can understand it. That's what this show is all about. Even though I might speak very fast or sometimes a little slow and, giving you the opportunity to pick up a lot of what I'm saying, go back and review these shows. Go back and check them out after you have more time. I know sometimes on a Tuesday, it might not be the ideal time at 6 o'clock, which I'm missing my guy, Ari Melber on MSNBC. That's my favorite legal guy on TV today. but we happen to be on the same 6 o'clock time frame, but that's all good because I keep them in the background. All right, but yes, credit is super important. And as Josh has just indicated, there's a lot of consumer surveillance and financial identity in America that is not being represented or understood in the manner that every single consumer can benefit. We are here to fix that. All right. So the rise of credit reporting. Before there was credit scoring, there was commercial credit reporting, unlike consumer credit reporting, which individuals are evaluated for their credit risk levels. Commercial credit reporting was originally used by merchants to evaluate the credit worthiness of potential business consumers. So yes, there was the business side and then there was the consumer side, because the consumers back in the day, we didn't have to really go to the banks or go to all of these, jump through all of these circus hoops to get what we needed. We could go down to the bank and there was our friend Joe, Jane, Mary, Susie, Tommy, Bob, whatever the person's name. But there was this firsthand understanding where you could walk in and they knew you, they knew your kids, they knew if you had any older kids, they knew, because most of these individuals were community-based understandings. So you had that personal connection, that connection that they wanted to create. Today, nothing like that. Absolutely nothing like that. You're being taken advantage of by industries that understand how exactly to take advantage. Industries that understand exactly how to take advantage. They know you better than you know yourself. And that's why I always tell you, I'm a professional, I'm a career professional. I am a career professional that has worked his butt off, and I'm going to continue to keep working my butt off until the man calls me and tells me, hey, I need you for another task or another duty. But I'm going to continue to keep doing what I'm doing. And what I'm doing is going to be beneficial, not for me. Again, I tell it all the time, and I'm going to constantly keep saying it. My reward is not going to come from a human being. My reward is going to come from that creator upstairs. And as long as I understand that, I'm able to deliver upon not my expectations, but your expectations, yours. In 1841, the agency was founded as one of the first commercial credit reporting agencies, using people known as correspondents to collect information about lenders and borrowers across the countries. In a way, it functioned a bit like modern-day credit reporting agencies, collecting information about the business person's material status, ethnic background, credit history, and age, which was then entered into a ledger that was centralized in one location, New York City. So New York City is where it all began, 1841. It was all centralized right here in this home state of mine, New York. All right, about 45 minutes south of where I am right now. Yes, that's where it all took place. The types of credit reporting relied on subjective methods of evaluations. In other words, correspondents would provide evaluations of people based on their racial background, gender, and moral character. Same ways they do today, but some of that has changed just a tad bit. All right, they don't use a lot of information that you might think. Like, for instance, they don't use your employment history. All right, it's categorized on it, so I'm not even really going to say that they don't use it. Again, the information that we are privy to is to give us a general knowledge. But trust me when I tell you, eOscar is one of their main culprits of deception. All right, Equifax, TransUnion, Experian, they're not there to help you. I'm going to constantly keep saying it because until we really understand their true methods of why they do what they do, they're a data collection company. That's it. They're about making money for themselves. Do you ever hear them talk about, oh, we got you. Here you go. Here's $200,000-$300,000 for yourself. Here, we'll just take that off your credit report. Do you ever hear them saying that? I got another challenge for everybody. It's called the Credit Reporting Challenge. Call each one of your credit reporting companies. And again, please reach out to me if you need to and ask them about your mailing address. Okay. And I know if you look at your credit report, I'm sure last week we did the show on annual credit report, how to get your credit report from annual credit report. And I want you to call them and ask them and say, hey, I got some stuff on my credit report and I just would like you to remove it. See what kind of dialogue that opens up. Just do it as a shits and giggles, as my British friends would say. All right, just do it as that. It's fun, just to see what type of dialogue that opens up. I'm telling you right now, you're probably going to be pleasantly surprised. If you're someone who's already dealt with them, you're probably going to be like, I don't need to do that because I already know that they are full of, thank you, horse manure. Yes, some massive retailers were installment houses, which were sold items such as furniture and drugs to consumers via installment loans. So again, we still see those today. Installment loans are more related to your mortgages and related to your lines of credit and related to auto loans, things that stay consistent every single month, not revolving like your credit cards, but they stay consistent installment loans. The retailer needed a way to attract consumers and ensure that they would be paid back. So they collected information about the consumers and submitted it to local credit bureaus. And there was quite a few of these local credit bureaus. We're getting ready to find that out. While there are three major consumer credit bureaus today, and again, that word bureaus was only designed to scare you. It was only designed to, again, create this sense of fear that if you did not do what Equifax, TransUnion, Experian wanted you to do, that the FBI might be coming and saying, hello, we need to talk to you. No, that's not the case. These are for-profit companies. These for-profit companies are about one thing and one thing only. It's about making money. If you don't understand that, then you're allowing your money to work, obviously, far better for them than it is for you. Okay? These are for-profit entities. They're only looking for one thing and one thing only, and that is to make money and make sure that their shareholders are taken care of. You are not their shareholder. You are not their major concern, so they're not going to be putting anything towards making sure that you are taken care of. Why do I know that? Why do I say that so eloquently and so definitively? I got congressional reports that tell me everything I need to know about their CEOs, about their CFOs, about their presidents, about their vice presidents, about everybody in that hierarchy structure, everything that I need to know. And if you don't believe me, all I'm doing is asking you, come on over. Come on over. Come on over. Drop me a line. If you think that what I'm telling you is not the truth, the question and comment section is always open, and I challenge anyone from Equifax, TransUnion, and Experian to join me any day of the week, primarily on Tuesday if you want to, because we'll drop you right on into the show and we'll let you really, really know what's going on, what's the goings on. Okay? It would, in fact, take hundreds of years to develop a national centralized credit bureau. Hundreds of years. So that in itself, it already, again, identifies the very same problem that we all see. There's no way to give you accurate information ever. It would take hundreds of years. Hundreds. So we must demand upon those three major ones that are out there, either you're going to do it right or you're not going to do it at all. It's just that simple. You're going to do it right or you're going to do it. You're not going to do it at all. It's just that simple. We cannot have these institutions that take advantage of millions of consumers just for profiteering understandings. How does that work? Again, hashtag make it make sense. Hashtag built broken system. That's what these are. These are built broken systems to do what? To make money for these major three. If you think about business the way that I've been in business for 30 plus years, enjoyed every single one of the opportunities that I've been afforded to work for whoever it may have been, whoever, UPS, United Airlines, Universal Studios, Real, you name it. I've been through quite a few companies and some of them Fortune 500s. So again, I've had access, I've had understanding, I've had the ability to gain so much knowledge along with also equally acquiring a degree. I'm ready for this time, this precise time in history to be able to help you get out of whatever circumstances related to credit that you might be in. And the only reason why is because I know too much. I know too much. And it's all good because those of us who know and we're open to share with those of us who are not quite fully versed, it's like going to another country. I tell everybody all the time, if you go into another country, would you go to that other country not knowing anything about that country? Not having some type of a lexicon or a dictionary or somebody who can translate for you? If you would, then you're a lot more bolder than I am. But I'm almost certain you would probably take something. This is what this is. This is giving you that something so that if you're ever talking to a bank, if you're ever talking to worst case scenario, getting yourself sued and having to get a judgment or having to fight off a garnishment. You need me more than you know. And I'm imploring all of you to get out of your own way and focus on the abilities that we can provide so that it's going to make you stronger. Companies like mine, businesses like mine, individuals like me, there are very few who are like me because the passion and the understanding that I bring to the table, that cannot be mimicked, cannot be duplicated. That's why I always challenge even the businesses that are out there that are do it with the utmost of ethics. Because if you are doing it with the utmost of profitability, it's only a matter of time before you crash and burn. It's just a matter of time. All right. So as I said, it would take hundreds of years to develop a nationalized, centralized or natural centralized credit bureau. So that's why we have these three perpetrators out there committing the egregious frauds ever known to man. All right. So credit scoring takes hold. It was until credit reporting became computerized in the 1960s that the industries would become consolidated. Now, this is what's so impressive about this. In the 1960s, there was more than 2,000 credit bureaus across the United States. So that gave people a lot more flexibility. That gave people a lot more opportunities to be able to, hey, you know what? Get that credit. I'm able to get that credit. Can you imagine having that many credit bureaus or credit entities that, again, were there and available for you to access a home, for you to access a car, for you to access whatever it is that you might have been seeking at that particular time? And today, only three. So we're looking at something that's been a pattern, monopolizing. And that's exactly what they did. Over the course of the next 20 years, the numbers would shrink to 5 and eventually to the 3 major credit bureaus that exist today. And they did that, again, purposely, strategically. They are not doing things for you. And I need you all to understand. I need everybody who can hear me, everybody who's listening to me. Please remember that they're not doing this for you. They're doing this for their own bottom line. Today, we have a handful of meat manufacturers. Today, we have a handful of grocery industries. Today, we have a handful of pharmaceuticals. Okay. I mean, it's not a wonder that all they do is consolidate. All they do is take the masses. They get bought up by a select few who reduce them by understanding, oh my God, I can get rid of this, and make more people do less work for, or more work for less pay. And then if they complain and do all that other stuff, then we just boot them out. This is how business works. This is how business operates. It's the saddest part. And again, we're now in the middle of everything that you need to know about shrinkage. If you've worked for a company and they're downsizing, this is exactly what we're talking about. And that's what they did strategically to help their bottom line. So that's why we have 3 credit bureaus as of today. Before the 1960s, all the files were in filing cabinets on paper and cards. We have these bureaus which have lots of money. They came into a town and bought up all the local credit bureaus with all of their information and computerized it. All right. So they had lots of money. They brought in new technology to allow for them to do whatever it is and whatever it is that they wanted to do. And that's why we're where we are today. That's why African Americans, that's why the poor, that's why deprived areas, that's why Hispanics. That's why poor white people. That's why people of color from multiple backgrounds and ethnicities. That's the reason why we don't have the understandings that we should, because of the fact that these companies knew what they were doing. They know you better than you know yourselves. And when you have that type of an imbalance, you're going to get taken advantage of. It's just that simple. It would take longer for credit scorings to gain widespread popularity in the United States. However, as lenders were hesitant to give up their use of character assessments in the evaluation of someone's credit. So they didn't really want to give it up freely, but again, someone's offering you the right price. Elon Musk still waiting for you to buy Twitter. Oh, you had no plans of buying Twitter anyway. You just wanted to, again, create more disruption. You wanted to create more, what's that perfect word? I'm looking for the perfect word. You wanted to create more hesitation in our means of being able to quantify whether or not you're a legitimate, upstanding person or some horse manure that we all figured you out to be. So step onto the side, Elon. Ain't got no more use for you. And that's, again, I'm going to tell it to you just like I want to tell it to you, just like you need to hear it, because nobody's doing that. We're all tippy-toeing around. We're being so delicate about feelings. Well, this is not about your feelings. This is about your livelihood, about being able to make sure that you not only get through tomorrow, but you also get through next month. Not only that you get through next month, that you get through next year. Not only that you get through next year, but that we establish some type of a 2 to 5 year plan. Not only we establish a 2 to 5 year plan, but that we look at the larger picture. What is your 10-year outlook going to be like? But it's going to start today. It's going to start with how you address every single line item in your credit report today. So today's FICO scores are considered to be the most widely used types of credit scores. According to Sally Taylor, which is a vice president and general manager of FICO, the company was founded in 1956 and would initially work with business clients. Again, everything was about businesses. The individual could always go down to that local bank and they could get whatever they wanted because it was that type of a connection. Our banks were more centralized in the community, and you knew your banker. You knew the clerks at the windows. So they would also give you that liberty. They would also give you that free time. Oh, don't worry, you got more than 30 days. You got 60 days. Oh, don't worry, you got 60 days. You got 90 days. They knew you that well. They knew that you were an upstanding citizen, and they didn't want to put you through all of these unnecessary hardships as they would love to do today. There was no such thing as invisible because you always was visible or were visible. All right, so they always focused on business clients, and that model that was specific to that company. All right, the idea that gave genetic models means to lots of different companies could use a credit score for the first time, and this makes credit scores much more accessible and popular amongst lenders. So as they developed this process and got more comfortable with it, what they did is they got to understand, whoa, wait a minute. Well, let's think about 25 years from now, or let's think 30 years from now, or let's think 50, 60, 70 years from now. We can make a lot of money off of this. And that's exactly what they did. These are for-profit businesses, for-profit billion-dollar businesses. And one of them should not be literally doing anything as of, at least in my professional and personal opinion, and that is Equifax. Equifax should be dismantled. Equifax should be torn down. Equifax should be broken apart. Equifax should not be able to operate because of the shenanigans that they pulled off in 2018. Oh, you don't know about that? Well, that'll be a show that we're going to have to talk about in the upcoming weeks. But Equifax, in my opinion, TransUnion, again, one of the smaller ones. But how do you call somebody who makes, or a company that makes billions of dollars, small? All right, and then the largest one, which is Experian. Experian is about 90%. All credit reports go through, or all credit scores are generated through the Experian, or use Experian, meaning credit lenders, auto dealers, Walmart, Target, the major players, they use Experian. All right, so FICO scores were then cemented as a critical part of the financial decision-making process, which Fannie Mae and Fannie Mac started requiring mortgage applicants to submit them in 1990. So Fannie Mae and Fannie Mac, again, these companies may sound familiar to you. The older generation, I know they do sound familiar to you. The younger generation, they may not sound familiar to you, but this is where you can see that consolidation. These companies are working together. They're not doing this for the benefit of citizens. Stop. If you don't believe that by now, I need you to go back in history and look at how much we as a people have benefited from these entities. Do we own homes? I'm talking about Black people. Do we own homes in the manner in which we should own homes? As let's put it. Let me rephrase that question. Do we own homes in the same manner as we rent? Because I'm sure if you're paying $17, $18, $19, $2,000, $3,000 for rent, why wouldn't a banker or somebody say, hey, you know what? You're paying that much and you've been doing that for the course of your life. Why wouldn't we give you a home? It's just another question or another circumstance that you can consider or think about as you are going to be making your way through the understanding of your particular credit profile. Because I need you to know it. I need you to know it inside and out. The next 3 years are going to be very, very critical for this country and for everybody who resides in it. And if you can get in front of your situations now, it's only going to make it that much more favorable for you in the long run. All right, so credit scores today. Today, there are many different types of credit scoring models used by a variety of lenders. FICO, however, remains one of the most widely used. The company claims its scores are used by 90% of top lenders. Now, FICO and Experian claim the same thing. So again, who's right, who's wrong? It's really very challenging to actually say. But I'm going to tell it to you again. They work together. They work hand in hand. Doesn't really matter who's wrong, who's right. They're doing it for one thing and one thing only. It's their business model, and their business model is to make money. That's it. If you can get that one part down to a science, your negotiations with these entities are going to be far more favorable for you. Okay? If you can understand that these businesses are out for one thing and one thing only, that's your money. That's it. They're not giving two heck of beans about whether or not you have the credit score that you're supposed to have, because they're getting the information that they're getting. They're not getting it because you're giving it to them. They're getting it voluntarily from their business partners. All right. There's a lot more. There's deep. It's deep. It's deep. It's deep. It's so deep. FICO credit scoring models have evolved since the 1989s to account for every changing consumers' behavior or changing consumers' behavior. Today's the scores range from 300 to 850, with higher scores indicating a greater likelihood that a consumer will pay back their loan in full and on time. Yes, obviously, higher your score, the more favorable attention you're going to receive from, but it's just, again, I use that word strategically because I wanted you to understand attention. You could have an 850 and they could still be charging you 10, 12, 13% because you just don't know enough about what type of attention you should be getting for that 850. All right. So it's not that hard or challenging. It's now for you to understand, I might need somebody like the Dress Down CEO to walk me through this. I might need someone who can help me negotiate my terms and conditions on my loans. I might need someone if I'm going into court because I'm now being sued by some slime ball who calls himself a bank or some deadbeat who calls himself a landlord. Yeah, I'm using the most vicious terms and I'm not hostile. I'm just using the terms that fully describe what you're dealing with. If you understand who you're dealing with, then you'll more than likely deal with them accordingly. Okay, unlike credit reporting and credit scoring models of the past, factors such as race, age, gender, and marital status are no longer considered. But don't think that for a second. They might not be considered, but trust me, if it's on your application and you do not check that box or you do not fill in that particular question that might be asked, don't be surprised if you don't get that product. All right. Instead, the following 5 factors are used to calculate an individual's credit FICO credit score. So FICO uses it, Vantage uses it, Experian uses it, Equifax uses it, TransUnion uses it, and it's these 5 items that are right here on this side. This is the breakdown of your credit, how that 100% gets broken into different categories. And as I say all the time, payment history, 35% payment history. If you can't do anything but pay on time, make sure you pay on time. It's just that simple. If you can't do anything but pay on time, make sure you pay on time. Now, adding to that pay on time, we are so accustomed to only doing the minimum payment because, as I stated, they know you better than you know yourself. They know if you make that minimum payment, you're probably going to go out that following day and you're going to be using that. But this is where the kicker comes in. If you use it the following day, you're never going to get reported in the manner in which you're going to get this extra 30 points. So this is why the ebbs and flows, as I keep saying, the ebbs and flows, they keep going up and down. We don't need that. We need you to get the 35 for paying on time. Then we need you to wait a little bit of time before you have to use that product again so you can get this full 30. Now you're at 65. So now we see an upwards trajectory going on here. Okay, so if your length of credit, and again, it's all broken down here, whether or not you've paid past credit accounts on time. Your utilization, which they call it amount owed, but we call it in our terms utilization. How well am I, or how much of my credit am I using, paying back, and bringing it down at the appropriate time frames. The total amount of credit and loans you're currently using compared to the total credit limit. All right, this is known as your utilization rate. All right, so those two alone, that's 65. If you can take care of those two, you're already on an upward trajectory. If you can take care of those two, you're already on that upwards trajectory. And then you're going to get some sprinkles from these 3 remaining areas. Length of credit history. This is how long you've had credit. This is one that everybody needs to check. If you're in the age group of me, which again, yes, I'm going to tell it to you guys because I love it. And girls, I love it. I love it. I love it. Let the grays come on in. This is a 56-year-old individual about to be 57 this coming July 14th. Can't wait. But again, you get my point. I'm an OG, and I don't mind being an OG, and I love it. Every time one of my students would tell me, oh my goodness, Mr. Glover, you're so old. And they'd look at me and go, well, you don't look old. Hey, black don't crack. I'm just going to put it out there just like that. All right. So 15% length of credit history. So if you got 35 and 30, that's 65. You're not going to get this full 15. That's just how the companies have set their algorithms up. And the algorithm is a program so that you can't get this full assortment here. You might get somewhere between 8 and maybe 11, but you're not going to get the full 15. But again, just take the 8. So we're at 35 and 30. That's 65. Add another 8 to that. We're at 73. Okay, 73 looks good. That's a passing grade. Oh, but I still got 2 more areas. New credit. Am I out there inquiring how often you apply for new accounts? All right. So we don't want you out there. 5 credit inquiries per year. Do not exceed more than 5 credit inquiries per year. Okay. Please. Can you do me that, folks? Please do not exceed more than 5 credit inquiries per year. Think of it in this manner. I am a handsome guy, and some of you are probably just as handsome as I am or better looking than I am, and some of you girls are definitely gorgeous and beautiful, women equally. But would you want somebody coming up to you every single day asking you out? Would you? After a while, that would become a little bit weird. Might even look a little bit suspect of that individual, and I might have to keep the light on or keep that can of mace or something by me all the time. But my whole point is that makes you look desperate. So let's not put ourselves in that desperate situation. 5 per year. Again, we're at 73. It's probably going to get you not the full 10 assortment, but anywhere, let's say anywhere between, again, 5 and 8. Let's say you get the 5. All right, so we're at 73. Add another 5 to that. That puts us up to 78. Still got one more category, and this is a good category as well. How well do I have the mix? What kind of a mix do I have? Is it the mix that's going to make more sense, or is it just the mix that's just, again, helping out the industry? If you understand your mix, it's going to help you out even that much more. Now, the majority of us, and let me read this really quick, the variety of credit products you have, including credit cards, installment loans, finance companies, and accounts, and mortgage loans. All right, so the mix they want you to have, and the majority of us only have the credit card mix that we use, and some of us aren't even using that. So if you're not in a capacity or understanding that you can go out and get a car, then you don't have that part of your mix. Clearly, a lot of us do not have a mortgage, so we're not even in that category. So the majority of us have to use that one category and that one category only, and that is our credit card category. So I'm going to give you some tidbits on what to do with that credit card category. Do not go out and try to get a credit card from Bank of America or Chase or Wells Fargo or Discover or oh my goodness, there's so many of them out there. So it's so funny because when I'm not talking about it, they're on the top of my tongue, and when I'm talking about it, it's like they elude me for some strange reason. Capital One, just again, please be careful. If you're going to get a credit product to build credit, look for something called secured cards. It's going to keep your interest low because you're going to be securing it with your own money. So your interest is going to be actually your money. Don't worry about the inflation piece right now, because inflation, again, I've said it before, it doesn't really concern us. I know. I'm going to get the ones, well, what do you mean it don't concern us? I feel it when I go to the gas station. I feel it when I go to the supermarket. I feel it when I buy my kids summer clothes and now soon to be upcoming school clothes. So I get that you feel it. I get it. But it's not that important for you to understand. I mean, for you not to overthink it. That's what I wanted to say. All right. But that mix, having a nice mix, is going to give you, again, we're at 78. Say you get another 5 here, that puts you up to 82. Okay. So you went from 0 points to just getting to 35. Now, again, I want you to really think about this. If you mess up here, you're not going to get that 35. You're not going to be able to make it up with the remainder. You're not going to be able to get to that passing grade with the remainder if you don't pay on time. Say you pay on time and you forget to bring down that utilization, but not to that 30%. How do I break that down for you? $1,000. I just maxed out $1,000. If I got to bring that down to 30%, that means I have to bring it down to $300. Okay? It's just that simple. Use simple math. And give you a better understanding, take your limit, multiply it times 30%, and that's going to tell you exactly what you have to pay or where your balance should be every single month. Once you do that, then you have to wait at least 5 to 7 business days for it to report. If you do not wait that time frame, you're going to be setting yourself up for failure. If you do not wait that time frame, you're going to be setting yourself up for failure. So again, that's your credit card situations. Installment loans, all you basically have to do is pay on time. All of the remainder is going to affect it because it's an installment. It stays the same. Financial companies, there's these third parties out there. For the most part, they fall into that installment category area. Same thing with your mortgage. Same thing with your auto. All right. So there are those that stay fixed. You never have to worry about it. All you have to do is just make your payment on time, and the rest of it will happen automatically. Credit cards are primarily the ones that fall into these 5 categories where you have to do the most of the work when it comes to your payment and the amount that is owed. All right. If you're doing these 3 here, again, that's just accessories to the full outfit. All right. In recent years, there's also been an effort to include data which is not typically used to to calculate credit scores. Experian Boost, which launched in 2019, allowing users to include recurring payments such as utility bills and monthly subscription payments on their Experian credit reports. Don't buy into the gimmicks. All right. John Cena can jump from as many airplanes on a cow as long as he wants to. John Cena can shrink himself down to little minion-sized things that can walk on your counters and tables as long as he wants to. Kevin Hart can yell at the top of his lungs. Samuel L. Jackson can continue to be the smoothest cat on for credit. But none of them will ever tell you what I'm telling you right now. Don't buy into the gimmicks. Because that's all they are, gimmicks to take advantage of you. Your monthly bill, say for whatever reason, you forget, that's going to ding you. Now, if you're using a smart program like Truebill, if I'm not mistaken, very good. I use it myself. Very good. It keeps excellent accounting, excellent bill payment, excellent opportunities for you not to make these mistakes. Just again, another little shout out to Truebill. But again, don't get caught in the gimmicks, these boosts, these so-called products that are helping you raise your credit score. If you're doing the right thing, you don't need gimmicks. It's just that simple. If you're doing what you need to be doing, why would you need a gimmick? Why would you need somebody to sell you on something that you already know? If I just do this, everything's going to be okay. And they should have those part of the process anyway. But now you can see what I've been telling you. They're only doing this for their own bottom line. And I'm going to show you right now. What am I talking about? All right. So in the U.S., 26 million Americans are considered to be credit invisible due to having a lack of credit history and I said that earlier, invisible. No one should be invisible. You're a human being. You operate, you function, you bleed, you go to school, you work, or you do whatever it is. So you shouldn't be credit invisible. The one thing that should be helping you with maintaining a existence, they're actually using it against you. So let's not do that. All right. Due to having lack of credit history, which with the issue affecting more Black, Hispanic, and low-income individuals. As I already said prior to this, Experian Boost can be a useful tool for those with poor credit scores or no credit scores at all, as it allows information regarding on-time payments to be included on their credit reports, which can help bump it up. All right, bump it up a bit. Trust me when I tell you, do the right thing. Watch it continue to keep doing that. You won't need trash like this. And I would love for Experian, Equifax, TransUnion, CEOs, CFOs, COOs, vice presidents, shareholders. It doesn't matter. Anyone who wants to join me here on Soul City Live, Soul City Network Live, on my program, I'll be more than happy to break it down for you. More than happy to break it down for you, and we can have the best dialogue. And who knows, we'd probably end up being best of friends, because I would be disclosing to you more about your product than you probably ever thought your product was doing. For those who want more in-depth information on their credit scores and monitor changes of their credit files, consider a credit monitoring service. Both Experian free credit monitoring or Experian's Identity Works provide you with potential fraud warnings, which can help protect against identity theft. Again, this is one of the major culprits in why our credit situation is as horrible as it is today. But they sure find ways of being able to dig deeper and deeper and deeper and deeper and deeper into your pocket. What we really want from them is that they start reporting our information in a timely fashion that allows for it to do what it needs to do. We don't need any more garbage products. Other free options to view your credit scores include CreditWise from Capital One, which shows you your Vantage score from TransUnion, or Discover Credit Scorecard, which shows you your FICO score from Experian. So again, they're all partnered together. They're all doing what they want to do. This is not to help you, the consumer. One more time. This is not to help you, the consumer. This is to protect their bottom line. Period. Try calling them and asking them to dispute an item on your credit report. They'll walk you through so much garbage, and they'll probably still wouldn't even do it for you. Yes. Why? Because I again, 30 plus, 20 plus years in doing what I'm doing, 30 plus years in just being a person in the business arena that allowed for me access to so much information. And once you know what a business does, you can easily figure out they're about money. Once you know their core and whom they're serving, they're not serving you, the client or the consumer. They're serving themselves. Once you understand that, the rest is pretty simple, pretty easy. All right, so here's that Experian dark web scan plus credit monitoring. So they say it's free. All right, so the cost is free, but you get it for one time, the dark web. So if something does happen in the dark web, that means you're back on the hook again. All right, so let's not get bought into this. This is just a gimmick. It's just a gimmick. It's just all it is. Terms apply. Again, once you know those terms, they're probably about yay long in some type of an onion skin type of a booklet that you're going to get that comes with it. And then you're going to find out all of the craziness that goes on. So don't get bought into the gimmicks. Yes, it's free. It is free, but try it out if you want. If that's what you want to do, go ahead and try it out. But watch after you get that free. Clearly, there's going to probably be something else that's coming along with it. Oh, what did I tell you? Experian Identity works. All right, so the identity, this is your theft insurance. Newsflash, most of your credit cards have already insurance tied into them. You know, just something I wanted to throw out there. That's all. I just wanted to throw it out there because they do. All right, $19.99 to $29 a month. For what? For what? For them to do what? As I told you, most of your credit cards already have insurance. What are they going to do? Credit bureau monitoring, Experian for Plus plan, or Experian Equifax and TransUnion for premium plan. So they can't even give you all of it. They're going to just give you one. But what if your lender decides not to use the one that they gave you and they needed to use TransUnion? So you're going to end up paying more anyway. Stop. It's not necessary. It's not warranted. And it's definitely not worth it. All right. If they do the right thing and you're doing the right thing, all you got to do is keep challenging them on making sure that they're adding it to your credit profile in a timely fashion so it does not hurt and it only helps. All right. So what is a FICO score and why is it important? FICO scores are used in over 90% of U.S. lending decisions. So it's important to know about the types of FICO scores and where you can check yours for free. So again, FICO scores and where you can check them for free. There's only one place that I know you can check it for free, and that's FICO. And sad to say that, you can't even check it for free there. You can't even check it for free at FICO. They're going to have limitations to what you can get because, again, it's a business. Why would they give you something for free when they know they can charge you for it? That's why, again, I'm not here to make this more challenging, more difficult, more anything. I'm just here to lay it out to you so that you can walk away with an understanding that, wow, I'm going to have to do more. I'm going to have to get in front of my financial situations when it comes to my credit. I'm going to have to be the driver behind that wheel. I can't leave it into anyone else's hands. And you're going to need a coach. You're going to need someone who knows this industry inside and out. All of your, again, who just won the championship NBA? I think it was the Cleveland Cavaliers, if I'm not mistaken. They had a coach, one of the best players that I've always felt, that Steve Kerr, one of the best players ever. It's point guard, killing it with the Chicago Bulls in the Jordan and Pippen era. But again, every successful institution, organization, people have coaches. And this is what we as citizens are going to need. We're going to need someone who can speak that language, someone who can narrate for us more effectively than we can until we're able to do that. But even when we're able to do that, we're still going to need someone who can, whoa, slow it down, whoa, speed it up, whoa, take it easy, whoa, be calm, whoa, just keeping us in perspective of all of those eventual situations that could potentially arise. All right, the 3-digit number known as your credit score is key to determine which financial product, including credit cards and personal loans, you'll qualify for. The 3 major credit bureaus, again, they're not bureaus, scare tactic, TransUnion, Experian, and Equifax, use 2 credit scoring models, Vantage and FICO. All right, so here's the FICO one right here. So you got your poor, 300 to 580. If you're in this area, it's time to sit down with a company like ours. If you're in that fair, you're probably somewhere paying anywhere between 11 and 18%. Sometimes a little bit higher. Again, it all depends on your lender. Not having a I always say, willing partner. You got willing partners, anything's happen. When you don't have willing partners, you're going to find yourself always trying to get that best deal, and it's never going to come your way. It's always going to be, well, this is the best thing we can do for you. So sick and tired of hearing that. All right, so 670 to 740. That means you should be somewhere in that lower double-digit area, 9, 8, maybe somewhere 10, 11, even there. Again, you're there. You're still somewhere where you don't need to be. That means there's still some information inside that credit report that needs some assistance. 740 to 800, you should be somewhere in that 5 to 10 range. If you are dealing with anything higher than that, again, you need to be talking with someone who can navigate for you, help you understand that you're going to have to start, again, renegotiating some of your terms and conditions because they're clearly not in your favor. And 800 to 850, you should be, again, if businesses, banks can borrow at 0 from the United States government, shouldn't you be getting 1 or 2? And if you're not, again, this is where I come in to help you. All right, ladies and gentlemen, as always, the day goes so super fast. I will be following up on this one again, but it just comes and it goes so quickly. It is 1 hour is not enough time, but I'm so grateful to have that 1 hour. Let's talk ways you can reach us. There's my phone number. Send me a text. Send me a quick shout out. Whatever it is that you need. Questions asked or answered. 805-428-9424. Also, the emails that you can reach us, leveragecreditrecovery@gmail.com. That's my overall business Gmail account. So please, by every means necessary, hit that one up. If you're ready to get started today, credit coach or coach credit 411 at Gmail. That's just letting you tell me, hey, I'm ready to get started right now, right this second. And lastly, the website is leveragecreditrecovery.com. As always, folks, I am one of the most blessed people on the face of the planet because I get to do what I love to do, which is help you get to that next level, help you understand that we're not going to be able to do this on our own. We're going to need every single one of us. I'm so grateful. I'm so blessed. And because of you, I get to do what I want to do, and that is give you all the knowledge, all the understanding known to man. My name is Tyrone Glover. I am the Dress Down CEO of Leverage Credit Recovery. Thank you so much for staying with me for this hour. I hope you were able to get more than enough information. See me back here next Tuesday. But prior to that, make sure you tune into my good friend, Dr. Yana B. Same network, Soul City Network. And her show is Access Wealth Nation. Thank you very much, everybody. You continue to be safe. I love you, America.